Hello, everyone. Thanks for joining us today for another educational video on Medicare. My name is Keith Knabb, and I'm the founder of Affordable Medicare Solutions. We are Georgia's largest and most award-winning Medicare planning agency. It's not just me, there's 10 of us here, 10 employees that are working year-round to help people to manage their Medicare. So let's get to the topic today. Today, the topic we're going to speak about is high income and Medicare, how the premiums of Medicare are increased if you are a high income earner or have a high income event that happens. So we'll get right to the presentation today and hopefully you'll learn something new. High income and IRMAA. IRMAA is the name that Medicare has given to this increased premium for Medicare. IRMAA stands for Income Related Monthly Adjusted Amount. That's a mouthful right there. But basically think of this as a backdoor tax on high income. So it happens after the fact, and it's an amount that you pay in addition to your standard Part B for outpatient Medicare and D for drug premiums. The Part B outpatient surcharge started in 2007 with the Medicare Modernization Act. And then the drug increase started in 2010 under the Affordable Care Act. So it's been over 10 years now that these penalties have been in place. It's actually determined by the Social Security Administration after they receive information from the IRS. And they will notify you if you need to pay this increased premium. So how it's determined is not your adjusted gross income, it's your modified adjusted gross income. And this is the total of tax-exempt interest, other non-taxable income, such as Social Security income that's non-taxable, and also the adjusted gross income, AGI, in your tax return, which is line 37. But the Social Security Administration looks at tax records 2 years prior because people can delay filing their taxes very late. So Social Security looks at 2 years prior to determine your increased premium, your IRMAA. It's a rolling 2-year look back. So for 2022, they're looking at 2020. So what is modified adjusted gross income? It's your household adjusted gross income with any tax exempt interest income and certain deductions added back to the income. So determining this MAGI is a 3-step process. First, you figure out your gross income for the year, and then you calculate your adjusted gross income, which is AGI, which is line 37. And then you add back certain deductions to find your modified AGI, modified. So here's what the penalty looks like. Every year they update this. So we have updated our video for 2022. And now they look at, for an individual, $91,000 of income being the threshold. Once you're over that, or as a couple, $182,000, then once you go above there, your premiums will start to increase. When you go up above there by $1, and if you get up to 500,000 or 750,000 and above, you will have a massive premium increase for your Medicare premiums. And you may not be a high income earner all the time. Maybe you've sold some property, or maybe you've had some other event that created some income that is not normal for you. Let's talk about what that means. Under Part D, the drug plan, it also is $91,000, and then it also keeps increasing much higher for the couples. Again, increases all the way up when you get to $500,000 or $750,000 and above. So what happens is, you can receive this notice that your monthly Medicare Part B or drug premiums are going to be increased by IRMAA. There is a form, an appeal form that you can fill out called the life-changing event form, life-changing event. And then you nominate on that form and identify what type of life-changing event did you have. Was it a marriage? Was it a divorce? Was there a death? Was it a reduction of your income? Maybe you were laid off. Maybe you had some modified adjusted gross income questions. You can provide further documentation, and you submit this appeal to Social Security for a review. So let's say it's a one-time event. You've had something, you sold the beach house and had a capital gains event, or you got a big retirement bonus at work. Maybe something happened that would be grounds for you to do an appeal. But if you've always been earning $500,000 or more, they're not going to, consider that a life-changing event, but you can still try. There's no reason why you shouldn't try to appeal your surcharge. So this form is very simple. It says that it's 8 pages. There's one page that's important. A lot of it is instructions and descriptions. But really, you can see on here the different items: work stoppage, loss of pension income, an employer settlement payment, their retirement payout. And then you put the date of the life-changing event. You tell the tax year that you've had your reduction in income, and you explain that to them. So what are the possible outcomes of an appeal for this surcharge and extra premium increases? Well, there's no harm in doing this, and there's 3 possible outcomes. They can say, yes, we're going to give you an approval and remove this surcharge. Or they can say, no, we're not going to remove this surcharge. Or they can meet you in the middle and say, we're going to give you relief. We're going to meet you in the middle and reduce your surcharge to a lower level on that chart. Now, you can appeal after any impactful event. You just can't keep appealing for no reason. But if you have a true impactful event, that would be grounds to appeal. If you do still have to pay this IRMAA, well, how do you pay for it? Well, it's automatically added to your Part B premium, which is your outpatient premium for Medicare. The drug surcharges are actually paid separately to Medicare. So you must pay them even if your employer or another third party, such as a retirement system, are paying for your drug premiums. But let's say you're getting your drug plan straight from one of the insurance companies. They're going to bill you for that additional Part D surcharge. And remember, Medicare treats these IRMAA payments the same as any other premium bill, which means if you don't make your payments on time every month, you could end up being in default and lose your coverage for non-payment. So be really, really careful about that. So thank you very much for joining this short video today. Don't forget, all of our Medicare services are free. There are no charges, and we have thousands of clients in all different circumstances and situations. Whether you're disabled, whether you're 90 years old or 65, we've got services to take care of you to help manage your Medicare and not set it and forget it. It is something that you want to review each year and make sure that you're not spending too much money or getting burned by high premiums. Please give us a call at 770-945-5261, and we'll be happy to help you. Thank you very much. Have a great day.